Welcome back to Morning Trade Live. I'm Oliver Renick, continuing an analysis of some of the key metrics that have been driving markets and catching investors' attention throughout 2018. I want to bring in Bob Iaccino to talk with us about the U.S. dollar. We're going to get to crude, but it's a little quieter this morning. So let's start with the greenback. Bob, at the top of the show, I've been pointing out that reason for the greenback strength might be some of the reasons for why we see stock stronger, which has largely been a very U.S. positive story relative to the rest of the world. Is it then going to be an indicator as to whether or not some of this equity strength continues, or am I barking up the wrong tree?
No, I don't think you're barking up the wrong tree, Oliver. I think you watch the Russell to confirm that thesis. I mean, if the Russell continues to charge ahead in the way it has along with this dollar rally, especially over the last week to 10 days, then your thesis is correct. And contrary to popular belief, I do think the Russell can slowly pull the other indices up, all else equal. The issue is that we just don't have all else equal. We got some more good news out of the trade front. Automakers should be strong today with China cutting those tariffs from 25% to 15%. There's some real detail, sort of a real action point that we were lacking yesterday. Yesterday it was just rhetoric that there's a truce, and a truce on what? You know, are things getting done, or are we just not tariffing the hell out of each other anymore? I'm not sure what a truce meant. So yesterday, in my mind, we just got back what we should have gotten back when the tariff talk started. That's when this sort of sideways weakness began. There's going to be a trade war. You got to sell equities. Now we get that back, and we sort of wait. So what's next? What's going to push equities higher?
I think that's an interesting point, Bob, because if all that volatility then was induced from some of this trade discussion, as I think it definitely was, there's no real debating that, then is it a better situation? Is it the same? Have we basically just kind of gone through a winding path to right where we began? Is there an environment that is now more sort of conducive to corporate profits and money making, or is that still going to be determined by a definite resolution for NAFTA, a definite resolution on China? I mean, there's still more chips to fall.
Yeah, well, that's a good point there. You threw in what I think is the key point right now. All we're doing now is going back to square one with China, right? There's a truce. Now, I think that extra move of cutting the auto tariffs from 25% to 15% is a slight positive and should be what's pushing, I think, the futures up slightly this morning. But to me, NAFTA is the big sort of overhang. We have to get somewhere on NAFTA. I mean, there's all this press coverage on U.S.-China trade war, and I think that's sort of the sexy story. But the largest trading partner we have is Canada. The largest relationship we have is Canada, Mexico, the U.S. It's critical for companies on both sides of that northern border. Mexico's made some concessions, according to reports, some concessions that would even bring automaking jobs back to the U.S. from Mexico's actions, not even from the U.S.'s actions. The sticking point, according to Trudeau, is just arbitration and a sunset clause, and otherwise pretty much everything else is agreed upon. So I mentioned this last week in one of my CME commentaries that if we get China good news, China-U.S. trade war good news, and we get positive momentum on NAFTA, now you're talking about something I think that can drive the equity markets higher.
Bob, what then does this mean from the trade conversation for crude, bringing it to oil? It seems like while we're talking about company specifics, some ag-related stuff, as China now, at least from the president's commentary yesterday, is going to be buying, I think, as much as we can produce, something like that. Bob, does oil fall into this anywhere, or is it just have its own set of catalysts right now that are separate from all these trade and tariff discussions?
I think it has its own set of catalysts. I think you look at the newly threatened sanctions on Iran as the potential for Iranian oil to come off the market a little bit quicker than we thought when President Trump first pulled out of the Joint Action Plan. When he pulled out of that, we saw quite a rally in crude oil, anticipating that Iranian crude was going to come off the market. And then we got that sort of 6-month window. Now there's more sanctions being threatened, so that pushes crude oil to a new high, right? That's 72.78 that we got yesterday on WTI. But you're seeing WTI lag Brent a little bit. And that to me is the first sign, that puberty thing again, that to me is the first sign that the shale producers in the States and in Canada as well are really going to start to ramp things up in a way that they haven't before. CapEx, hiring people again, investment in new pipelines, which there's a couple that have now been approved. There's only a certain amount, that's been the problem for Canada, right? There's only a certain amount of transport space, and crude oil runs in a pipe at 11 miles an hour. There's nothing you could do about that. So I think that we're starting to get that sort of toppy feeling in WTI. That's not going to be the case with Brent. I think now you look at the spread between the two to tell you what's going on in crude oil.
Yeah. Bob Iaccino, we got to leave it there, and you got some laughs from the control room. All right, Mr. Iaccino, great to have you back. Appreciate you joining to talk oil and more with us. Bob, coming to us from Path Trading Partners. All right, up ahead, we're going to take a look at what's moving before that opening bell. Stick around. We'll be right back on Morning Trade Live. A lot of earnings, a few other big items. Micron is on the move higher. Stick around. We'll be right back with the Chief Market Strategist, Iaccino.